Hey everyone, America's housing market has gained $20 trillion in just the last 5 years. I want you to think about it and let that set in or sink in for a second. That's $20 trillion. That's a lot of zeros. But here's the kicker. Not everyone shared in that wealth. Some states had huge gains like New York, while other states like California, Florida, and Texas actually lost billions in value in 2025. So today we're going to break down what Zillow's new report really means, why some states are thriving and while others are cooling off, and most importantly, what you should take away if you're a buyer, if you're a seller, or if you're an investor in today's market. First, let's start with the big picture. So according to Zillow, America's housing market is now worth a record $55 trillion. That's a 57% increase since 2020. In plain English, that means the value of all U.S. homes has gone up about 20 trillion in just the last 5 years. Now, you might be asking, well, how is that even possible when mortgage rates have been hovering at elevated rates? I mean, shouldn't that cool things down? Well, yes and no, technically. Mortgage rates have definitely sidelined a lot of buyers, but the other side of the equation is supply. And in many markets, supply is still very, very tight. And when demand outpaces supply, even if demand is weaker than it was 2 years ago, prices can still hold firm or even some cases rise. But here's the key. Those gains aren't spread evenly. Some areas are absolutely booming and others are cooling fast. Let's kick things off and talk about the winner. So in 2025, New York added $216 billion in housing market value, more than any other state. Now you had New Jersey, Illinois, and Pennsylvania who were right behind. So why is that happening? Well, simple. Demand keeps continuing to outpace supply. Now, Zillow's economists put it perfectly. New York has about half as many homes for sale as it did before the pandemic. Half. So even with high interest rates, when there are so few homes available, the existing stock becomes more valuable. Scarcity is simply pushing prices up. So if you're a homeowner in the Northeast states, you've likely seen your equity jump up even in this so-called down market. Now, let's flip the coin. Pandemic boom states like Florida, California, and Texas lost billions in value this year. Now remember, just a couple years ago, these were the absolute hottest markets. People were moving for sunshine, bigger homes, in some cases, looser COVID restrictions. But demand has certainly started to cool. Inventory is building and buyers aren't rushing in at pandemic-era prices. Now here's a major factor: insurance and taxes. Florida, California, and Texas are especially vulnerable to natural disasters, hurricanes, wildfires, floods, and insurance companies have been hiking premiums like crazy, in some cases even pulling out of certain markets. Now, one Florida agent told CNN that they had buyers cancel deals on the spot after getting insurance quotes. That's how bad things have gotten. So between higher insurance rates, higher property taxes, and more inventory hitting the market, these once hot states are definitely cooling off. Now here's where things take a little bit of an interesting twist. Zillow's report shows that new construction is actually helping prop up values in some of these Sunbelt states. In Texas, for example, over 20% of the state's market value gains since 2020 came from newly built homes. That's the highest share in the country besides Utah, Florida, who aren't that far behind either. So while resale homes are losing ground, builders are creating pockets of affordability with new homes, and for many buyers, that's the only way that they can get on the property ladder right now. Now, this is important because it shows that the market isn't a one-size-fits-all. Even within a state, you can see resale values sliding, but new homes holding strong. So what does this mean for you? Well, if you're a buyer, this might be your chance in certain states. Florida, California, and Texas are seeing sellers make concessions, price cuts, or throw in perks just to close the deal. But be careful. Always factor in those insurance premiums and property taxes. They can absolutely wreck a budget. And if you're a seller, especially in markets that are cooling, well, you've got to be realistic. The days of multiple offers, $50,000 and over, asking price are fading. And price your home strategically and be prepared to negotiate. And if you're an investor, remember this: real estate is cyclical. What goes up well, must come down, and what cools often comes back stronger later. The question is, it's all about timing and knowing when the markets have the fundamentals to bounce back. So let's take this all home. American housing market is bigger than ever, worth 55 trillion, up 20 trillion in just the last 5 years. But the wealth isn't evenly spread. New York and the Northeast are soaring because of scarcity, while California, Florida, and Texas are cooling because of insurance costs, taxes, and rising inventory. So here's the bottom line, friends. Don't just look at the national headlines. Real estate, as we keep repeating, echoing over and over again, is local. Your experience as a buyer or a seller in California could be completely different than for somebody in New York and Illinois. And for those of you right here in California, this is where I come in. I'm a local agent, and I've been in the trenches in the market now for years. So if you're trying to figure out your next move, whether to buy, sell, or just wait, let's talk strategy. Well, friends, that's all I have. Thanks for watching. And if you found this breakdown helpful, hit that like button, subscribe for more housing updates, and let me know in the comments down below what you're seeing in your local market. Well, friends, I'm going to be shutting off the cameras. I will see you in the next video.